Special debate on the agribusiness challenge of food security in India has largely been crystallized around the debate on the food security bill, their pros and cons, merits and demerits, and in fact it's become intensely political in India. But food security as a concept perhaps is much larger. There are supply side issues, there are yield issues, there are issues about land, there are issues about biofuels, there are pricing issues, and of course there are issues about mechanization, about incentivization, and so on and so forth. One of the things that we will try and answer, the big question really would be, in the context of emerging market countries, is food security a viable option? And if so, how can that be achieved? I'm Abhijit Neogi from Bloomberg TV India, and joining me is a very special panel to debate the entire theme and its substrands. I'm joined by Mr. Ashok Gulati, Chairman of India's Commission on Prices for Agricultural Costs, the CACP. He's a man, Dr. Gulati, he's known in government circles for recommending all those MSP increases. Of course, we're also joined by Thomas A. Lumpkin. He is a specialist in agri-research and R&D. He's from CIMET, which specializes, it's an organization which specializes in yields research in wheat and maize. We got Herbert Oberhansley, Vice President Economics and International Relations from Nestle, Switzerland. He'll give us the MNC perspective about food security and the larger picture surrounding that. And Hardeep Singh, member, Supervisory Board of the Dubai Multi-Commodities Center, UAE. He can also talk about trade flows because that will also have an impact on food security going forward. Thanks all of you gentlemen for joining us on this special debate. Some housekeeping rules. We'll basically try and keep this very precise and interactive because this is a televised debate which will be going out on Bloomberg TV. We will have initial comments from the panelists, about 5 minutes each, and then we will have a debate within the panelists. And about half an hour's time from now, we will throw on the floor 2 questions. So that's the broad contours of the debate. If I can begin by asking you, Dr. Gulati, food prices, for example, in emerging market contexts like India, it's soaring through the roof. Food inflation is still pretty high. Going forward, how do you address that? Because you are in the CACP. Your price recommendations are taken very seriously by the government. How can that be addressed?
Let me make it clear your broader issue of food security and where the prices fit in. You have 4 elements of food security. First is the availability of food. Second is the economic access to food, where your prices question will come. But the third aspect, which many a times is missed, is the absorption of food in terms of nutrition. And the fourth and the last one is stability in the food systems as such, because the shocks are very disastrous to the poor. Now, on the issue of availability of food, there is no dearth of food in India. In fact, if I may say so, the issue of wheat and rice stocks are way beyond the buffer stock norms of the government today. Way beyond, more than 100%, almost 200% up. So availability is not an issue. The issue is high prices of food, and therefore poor do not have access to it. And your question, why the prices are high, globally and domestically. If you recall what had happened in 2008, the global recession, the financial meltdown that started, and the G8 and the +5 all gathered together, and the collective wisdom was that let us pump in a lot of fiscal stimulus into the global economy. And the IMF at that time said almost 2% of your GDP let's pump in. It's not only US who announced a $600 billion fiscal stimulus. China announced about $580 billion. Europe announced about 200 billion euros. And India was not far behind. In fact, it suited very well just before the elections if that type of fiscal stimulus comes in. And within a year, compared to 2007-8, 8-9 and 9-10, the fiscal deficit of the government more than doubled, 100% increase. So when you are pumping in so much of money into the game. The money supply growth in the country was 17-18% per annum, and your supplies are increasing in agriculture on an average at 3-3.5% per annum. What do you expect? The net result is high inflation.
No, but some of it also goes into public investment agriculture, which of course...
That's a big difference between the Chinese fiscal stimulus and the Indian fiscal stimulus. We were trying to compare the two. In the Indian fiscal stimulus, the larger chunk went to pump in consumption. You know the loan waivers, you know the salary hikes in the 6-pay commission, you know the expansion of Manrega.
So you're saying it's the broader economy.
So it's the demand side that was deliberately pumped in to avert any recession in the global economy.
Sure.
And so the whole price level is resettling at a different level because too much money is chasing too few goods. Having said that, one more thing that is very critical for the Indian food inflation, last 5 years, the pressure is more and more on protein goods, protein food, that is eggs, milk, fish, meat, and pulses, which are proteins of the vegetarians. Compared to the cereals group, if you look at the prices have risen much faster. What does that indicate? That indicates that when the growth was up, incomes were rising, you are not going to consume more and more of rice and wheat per capita basis. You are going to put in more of protein on your plate. And that is a lesson that we are trying to learn, that instead of remaining obsessed with the policies of rice and wheat, we need to diversify.
Which is why you trashed the food security bill.
I won't say trashed. I have a little different opinion about the food security bill. I feel the poor in this country do need help. At present, the government is coming with a massive security bill, a food security bill. Physically, we will be distributing anywhere between 60 to 65 million tons. My little difference with the government is that you use an income policy to help the poor rather than go through the price policy route, because this will lead to large leakages in the system. So poor will still not get, because you are going to give wheat and rice at 2 rupees, 3 rupees a kg, and that will incentivize many of the players in between to divert that. And therefore, I would play a conditional cash transfer to the poor and let the markets function. So that is the route I'm officially suggesting to the government.
But just one interjection for many of the viewers or our audience who's actually from abroad, India is actually trying to experiment with what's called a cash transfer scheme. Essentially, it's transferring entitlements through a unique identification number, which is in the works, and actually linking that to your bank accounts and actually transferring all your entitlements there. It's work in progress, but it's just about started. That's what you wanted to say.
That's exactly. At present, the cash transfer scheme does not touch the food and the fertilizer subsidies, which are likely to be, anywhere between 150,000 to 200,000 crores.
Conservatively speaking.
That's, So we are saying that both of these need to be given directly to the targeted beneficiaries through the cash transfer route, and you get the fertilizer markets as well as the food markets totally.
Okay, hold your thought there. We're not going down that route right now, because you raised some pertinent points about price issues as well as your demand patterns changing more towards protein-based issues, which actually is one of the reasons why in India inflation is so high. It's actually food inflation. But coming to you, Mr. Lumpkin, from the supply side, you've done agri-research. That's fine. I think they can handle it. Okay. They can handle it. So you've done about agri-research for the past 35, 40 years. In CIMET, which is in Mexico, you've specialized in yields research on wheat and maize. From a pure historical point of view, in terms of wheat and maize, which has been the concentration of Indian policymakers as well, what's been the yields history for these crops, and how does it look like going forward?
Well, coming out of the green revolution from the late 60s into the 70s, we were seeing year-on-year yield increases of more than 2%, and it was pulling ahead of the expansion of the population and of demand. But since coming into the 2000s, and particularly the late 2000s, like in the case of wheat and rice, we've seen yield increases year on year drop down to 1% and sometimes even less in some places. So this is not, in theory, it's not keeping up with demand, and it's of great concern. And part of it is we haven't invested in the research, in the technologies, and I can even get into that. There's quite a number of exciting technologies that could get us back, get the pace of yield increases back above that 1%. There's advances we can make in photosynthesis, in hybrids, in reducing losses of nitrogen fertilizer from plant exudates, from going towards precision agronomy. I can get into those in more detail. But we can, if we'll invest in these exciting technologies, we'll get back out in front of that.
You can beat demand if you
Yes.
invest in these technologies.
But I would also like to just mention one thing that was said about protein. Please remember that wheat is a very important source of protein. It's got 10% or more protein in it. Mm-hmm. And for the poor who are making chapatis directly from whole wheat, mm-hmm. they're getting 20%. Of their protein is coming from that wheat. So mm-hmm. it as a crop is a very important source.
Right. But you're basically saying that going forward, if rightly invested, then the wheat demand at least can be beaten. Is that what you're saying? That's almost an insight.
We can keep up with. I mean, India is...
Because what the data that FAO suggests
yeah.
Actually is very different, because they suggest that given the emerging market patterns, it's very difficult to beat wheat demand in the near future. But you're saying something different.
Well, there are exciting technologies. It's a very depressing situation if you look at it directly, but there's exciting technologies, if we invest in them, that can keep that from happening. But wheat is under pressure. Like in the US and Canada, maize is pushing wheat out of high productive areas. The farmer can make more profit with maize. So wheat is being pushed into drier and colder areas just because of the economics.
Sure.
That is going to start here. It's happened in China. Mm-hmm. Maize is the #1 crop in China now. It's past rice and wheat just because of the meat demand. That's going to start happening here. Hopefully you can hold it back a bit by trying to encourage a new version of vegetarianism, a more attractive and nutritious vegetarianism. Mm-hmm. But it's coming here also. And maize and soybeans are going to start pushing rice and pushing wheat out of some of their productive areas.
Right, Mr. Obansley, you're from the consumer side. I mean, you represent a big MNC. You're in the food chain. From a larger point of view, how does the food security aspects, and they're very different in OECD countries rather than emerging market countries. From a consumer point of view, what are the basic issues that concern you right now, especially in emerging market contexts? Is food security viable in the current context?
It's not. I think this was already made clear by the two precedent speakers. Maybe to quickly put things into perspective, sometimes the importance of multinational companies is overestimated. We have heard it over the last 2 days, how important companies from emerging economies are, how important small and medium-sized companies are. We, as the biggest food company in the world, when you look at the total food market, everything included, we have 1.5% market share. This is the reality. So we have to be very modest on our impact. Now, where are the challenges that we see when you look at from a consumer side? We are probably closest to the consumer. We are not the consumers ourselves. In the production, you have the sufficient calories and proteins. This becomes a challenge. Not so much what is often said about climate change. If the temperature will increase, food production will massively increase. This is what the outcome, one of the outcomes of IPCC. You will have to open market because it will be in the northern areas. The main challenge is water. Our scenario is that due to water shortage, there is a risk of a 30% shortfall in cereal production by 2030. And you have areas like Punjab where water tables are falling 1 meter per year. You have it in China. You have it in the US in the main cereal production areas. This is a scenario that really is frightening, I think, not only for a food company, but overall in general.
So because, it's interesting to say that, and I wish I can show this to the audience here. I've got map from FAO, which actually says that in the Arctic regions in the northern hemisphere, from 1976 to 2006, there's been an increase of about 3 degrees centigrades in temperatures on an average, which impedes wheat production. Now, from a pure corporate point of view, how does a company like you re-strategize in given that kind of a situation?
We are not in big volumes of cereal trade. I think there are other people here who know that better. We are mostly in value-added food, so we are not in the in distributing in the end the basic calories. We are in food manufacturing value-added. We have to organize our supply chain. We have to constantly adapt our supply chain to the realities, but still what we try to achieve is local supply for local consumption. The basic product that we are selling, or the most important product, is milk-based product, and there you don't transport over long distances. I think what you are asking is a question to politicians. It is more urgent than ever to open agricultural markets. Mm-hmm. When you see production increasing in regions like Canada, like Russia, with an increase in temperature, and it's a massive increase that is possible there, you have to open markets even more.
Okay, you've got to open markets more. So Hardeep Singh, do you agree with that? Because that's the common refrain that we hear in the WTO, and that's a position that India's taken. India's taken a position in the WTO that, look, this is livelihood as far as we are concerned. We just can't open our markets, agricultural markets, indiscriminately. Now, you're an expert in trade flows in agriculture. How does this pan out? Do you agree with him in the first place?
Yeah, I completely agree. In fact, if I can show it to you graphically, can somebody put on the, is somebody here to put on the deck?
I think you should carry on. I don't think.
We had some, 1 second, let me just try to put it on track, because I thought a representation on a chart might be easier for people to. Is somebody here from the organizers? Well, can you just put this on?
We need the, audio video, please.
I thought it would be easier for you to see graphically the way it's going. I think first of all, we need to take a realistic view on trade flows. And most countries are in denial on what the trade flows are going to be globally. Mm-hmm. If you look at the last 50 years, trade flows have shifted dramatically. The North American continent was the largest supplier. Even today remains the largest supplier, but quickly being overtaken by the South American continent. The largest deficits are, and that's the chart that shows it to you, the largest deficits are in the East. Mm-hmm. So the areas of highest population density are the areas of largest deficit. That's the total food flows, including food, feed grains, and food equivalent of feed grains. So that's over the last 40 years, what's happened to food. And as you can see, the Far East is the largest deficit area. That includes China. Mm-hmm. Sure. Also, there is the tyranny that these lands now are the areas of largest consumption are also the most densely populated. They have some of the oldest lands, some of the most tired lands. They're the most intensively irrigated. India and China are among the most irrigated lands on the planet in terms of arable land, with some of the worst endowments of moisture. We are also the most intensively farmed. India is much more intensively farmed than all of the North American and South American continent. Mm-hmm. So we are intensively farmed, we are intensively irrigated rest of the world versus the rest of the world. And these traditional land pools, the oldest land pools in the world, which were the granary of the world in the past, are also the most depleted and the most tired. That is a huge issue.
So what's your point?
So we have to, the reality check is that food is going to flow. If you've seen recently, China has now emerged as, some say, a structural importer of rice.
Sure.
They've imported rice for the first time ever this year. There's an argument whether it's strategic for them or whether it's structural, but the fact is it's been imported. Also look at the fact that the largest exporter...
Hardeep, let me ask you a question here. You said, food flows will happen, flow. If that were the case, please explain, why did India walk out from the WTO negotiations? And I'm not going into WTO. When India actually had a lot to gain from services and manufacturing, It walked out because there were issues about agriculture.
So I think that's, and you've stated the answer in your question. I think we're in denial of where our trade flows are going to be. How you address your position on the WTO would be as a consumer, as a net consumer. You will have surpluses in some commodities, but structurally long term, you would need to be living on another planet to say that a country which is going to be 1.5 billion people with a 1.5-2% growth in agricultural productivity, with land being given away to urbanization,
Yes, but provided your
industrialization,
distortions are not there, right?
and no
you can
moisture,
you can import, but
we
because
will
you've
be
got
among the
bottlenecks,
largest importers in the world.
you can't
China
export out.
already is. We will be. Now, whether it is going to happen tomorrow or whether it's going to happen 10 years, look at what's going to happen on consumption. Some of our consumption, as people move up the economic ladder, consumption patterns change dramatically. And Ashok spoke to that somewhat. People consume more complex foods. Complex foods take much more land to produce. And that's what happens as people move up. So when you talk of a 6-7% growth rate, the implication is people consume more complex foods. Today, India imports 7 to 8 million tons of vegetable oil. 7 to 8 million tons. We're among the largest importers in the world. And that is with the oils and fat consumption, which is half of the United States, half of Europe per capita. So these people can consume that. They are not consuming it.
Okay, I take the point. Mr. Gulati, land usage. Now, if you look at India's arable land, it's comparable to the European continent. The problem is they are small land holdings. On an average, I think France's land holding pattern is 50 times more than us. US is about 200 times more than us, which obviously impedes mechanization of farm holdings. That is one issue, right? That's a huge bottleneck. And how do you address that?
Well, let me try to see, you will have more exciting thing if we debate right across the speakers also. Hardeep says that we will be the largest importer of food. Maybe, I don't know, maybe 30 years, 40 years down the lane. 20 last years, if you look at 90 to 2011, 12, 21 years if you take, agriculture, both exports and imports, were only less than 5% of agriculture GDP of India. In 11-12, they were 18% of agriculture GDP of India, 3 times more,
Sure.
3.5 times. Exports were $37 billion and imports were $17 billion. So we had a net surplus of $20 billion as far as the agriculture is concerned. 12-13, it's going to be more than $40 billion worth of exports, despite the fact manufacturing and global economy, everything in a dormant state, and our imports will be about $20 billion. The biggest import, edible oil, as Hardeep said, last year we crossed 9 million tons, about $10 billion roughly on that question that we spent. But our yield levels and the question of your small holding sizes, we shouldn't look towards the American model or the European model. The model for us is going to be China or Indonesia. And you look at that China's holding size is half of ours, and their productivity almost in every commodity is double than ours.
What's the magic?
That's exactly the issue. I'll give you our prime crop. Our biggest staple is rice.
Sure.
China produces more than 200 million tons of paddy from 29 million hectares. We produce about 150 million tons of paddy from 44 million hectares. Entire eastern belt of India, the productivity is hovering in terms of rice between 2 to 2.5 tons per hectare. It can go to 4, it can go to 5, right? So more investments are needed. Today, Punjab gets a minimum support price.
What has China done that we haven't?
No, that's what I'm. Hybrid rice, for example, in China, 63% of the area in China, paddy area, is under hybrid rice. In India, it is less than 3%.
Okay.
So you need catalysts of change in seed. Yesterday's green revolution came from the CG centers of Summit and Erie.
Yes.
Tomorrow's green revolution and the biggest change, and that's where perhaps Tom and me have to debate, is likely to come from the private sector, and that's where agribusiness issue. Why? India's last year budget, we spent 2,500 crores was the budgeted. This year, 13-14, they are saying 3,500. It's $600 million for the whole country research. One Monsanto is spending $1.5 billion every year on research.
Sure.
Pioneer DuPont is putting it about $800 million.
Well, that's because, you see, heading into an election year, they have to budget for food security.
No,
Because that is the
question
Congress's
is,
pet
do you
project.
want to keep feeding through cheap food, or do you want to invest to increase your yields and then make abundant
No, which
food
is where Mr.
available?
Lumpkin would come in. This, he's made this reference to China.
Well, if you were eating like China, if India was eating like China,
We don't.
you would be in a very severe food deficit. You would be needing 25 to 50% more cereal production and soybean production to keep up with where China is. You mentioned the multinationals. One of the things that is driving modern agriculture is GMOs. And China has opened up in maize and in some areas on GMOs, in rice. India has not. And this is much of this new approach, the agronomy of producing these crops relates to some of the GMO traits that are out there. India needs to get on board with that in order to help boost your productivity. You don't have to be experimental on people in India. You can use things that have been used for 15 years elsewhere. But that is a linkage. And the varieties have huge yield potential. The varieties that are out there, it's the agronomy is so primitive here. That's where the big gain in production, in the precision we need to bring to agronomy, the right fertilizers, the right water, and
My
the right
question
seed
to
at the
you
right
is,
time.
as an agri-scientist, is, India is so intensely irrigated, so intensely plowed. Yield levels do drop historically. The point is, mechanization is almost an impossibility in these small holdings. But as he said, if China has done that,
It's not
probably
impossible.
we're doing something wrong.
India, China, Japan, they're highly mechanized. There is small-scale mechanization.
Sure.
You're getting service providers now in India, combine service providers, even rice seedling, planting service providers. We need more of that. We need to encourage that. Direct seeding, conservation agriculture service providers, precision agronomy service providers.
Now, I know that cement has played a big part in India's green revolution in the 60s. And in fact, one of your scientists was the Nobel Prize winner for that.
Yeah.
Going forward, don't you want to diversify into other emerging crop patterns, for your yields research?
Well, CIMMYT and the governments of South Asia want to do that. We're creating a Borlaug Institute of South Asia for maize and wheat, and including rice systems. And in those studies, we want to help the diversification, help the shifting. We want to shift rice production, say, from the Punjab, Haryana to Bihar and Bengal and Eastern UP. We want to bring maize production in perhaps much more into the north, and bring soybeans into. So India can, willingly or not, move forward in these trends of consumption that the rest of the world is following.
Sure. So Bansley, turning to you, there's this huge debate in India about FDI in retail. It's touted as the cure for all ills in the agriculture sector. Obviously, it's not. But what does it do to the supply and distribution logistics in the agri space?
I think there again you have to think about the overall food system. And then where I wanted to add, because food security has more dimension. It has the food quality, and that includes food safety. It includes micronutrients. And if you allow, I would like to say afterwards a few words on that. And then it's the whole chain, the losses in the chain that you see in traditional agriculture. It may go up, quantity losses up to 55% of the original produced agricultural produce, quality losses also up to this level. And here, when you are well organized from the farm to the retail shop, take for instance our milk, the milk that we bring either in transformed or in as fresh milk to to the consumer. In the traditional supply, and we have here examples, especially from Africa, you would have losses from the farm to the retail shop in the order of 16 to 25%. We have brought down these losses to 0.6%. This is what the overall chain does. And again, I'm not saying we are doing that alone. You also need a very efficient retail. Let me now come to the quality of the food, food safety. I think there is a huge improvement in the quality of the food thanks to packaging. In the Western world, everybody is panicking when he hears about packaging materials. He thinks it's the worst that happens to the environment. It's not. We are reducing losses with proper packaging, but there are more to it. I mentioned micronutrients. We forget, I think it's in the order of 2.5 to 3 million people dying because of vitamin A deficiency. That's again something that you can do as a manufacturer, and hopefully the consumer, and in between the retailer picks that up when you reinforce, always in coordination with the authorities, because you have to add the right thing. Some areas you have to add iron, some areas it's vitamin A, other areas it's iodine. So you have to understand the full chain, be in the chain efficient. I think it starts with efficient agriculture, and what has been achieved there is absolutely marvelous.
No,
but
sure.
The one point that was not discussed and that I want to bring up, the one big challenge now is water. It's not land, it's not climate, it is water. And if we are not taking into account this part of the equation, we will, in this very beginning, we will be at a loss.
No, I'll come back to climate and water, but my point to you is we talked about FDI. There is this notion that somewhere we're going to balance between remunerative prices to the farmers and affordable prices to the consumers when FDI and retail comes in a big way. Is that the global experience? Do you think that that's possible?
You have to approach it in a different way. Take again the milk chain. We pay the farmer more for a lower bacteriological status. So if the quality of the milk increases in the interest of the consumer, we pay more. We are not paying more for if he's not beating up his wife, to simplify. Sure. It's not this kind of fair trade. So we have to pay for a higher value added. We have to help the farmers to become more productive. If we artificially increase the prices, at the end you have a poor consumer or not so wealthy consumer. Often you end up nowhere. And this is what we are trying to do. Now, again, it's not FDI, it's the private sector, it's other players. We as foreign investors, the total, I mentioned our market share, 1.5%. Yes. If you take the 20 biggest multinational companies in our area, food manufacturing together, they control in inverted comma, 8%. It's a large number of small and medium-sized enterprises. Sure. And you have to give the right incentive from a market perspective.
Now, Mr. Gulati, pricing. Now, you're involved in a big way in pricing of agricultural commodities. Some of your recommendations are taken on board by the government. A criticism of the CACP is that somewhere the pricing is slightly opaque, and the implication of that is crop patterns are skewed. Do you buy that argument?
I don't know what you mean by opaque. There is a system in place, and for those who are not
okay, let me be a little more blunt. There is a criticism that somewhere the pricing is politically influenced.
Not at all. Not till the time I'm there in CACP.
I'm not insinuating anything against you.
Assure
That's just a criticism. I'm just bringing it.
We are a professional body, and we recommend to the government what the prices of different commodities, the minimum support prices should be. 90% of the time, I would say 95% of the time, the recommendations are accepted. If at all, at any time, the government has not accepted one or other commodity, they have topped it. So it's always upward bias rather than downward bias. I'll give you the example. Last recommendation on which there was a little bit of debate in the country, we had recommended freezing the minimum support price of wheat.
Yes.
And you can say politically that may not be very savvy recommendation, but we were looking at the stock situation in the country, that wheat stocks are more than almost 200% more than what the buffer stock requirement is. We didn't have even the storage facility properly to keep wheat. So under that situation, now the dilemma is that the farmer says, my cost of production is increasing, therefore you increase my price. And that's the pressure. Not only the political masters get it, we also get. Every third day there are farmers associations in my room.
No, you have empirical evidence to support that.
But then I have to keep on telling them that don't look only at the supply side, your cost curve is the supply side.
Sure.
What about the demand side? As you were saying, that if the demand is less than the supply, either you should be able to export that successfully, otherwise the price cannot be increased, and that's the problem.
But the problem was the wheat exports was banned for
So
long.
wheat exports are banned for 4 years. So my first recommendation to the government was, you need to liquidate immediately 10 million tons of wheat, otherwise there is no place to keep the next crop that is coming in. Last week, the cabinet has finally taken a decision, 5 million tons of wheat will be given to the private sector from the government godowns for exports. Already 4.5 million tons have been already on the export shelf. So we are still saying 5
But the
million
damage,
tons
Mr.
more.
Gulati, has been done, because I remember in 2008, basmati rice was banned from India.
Not basmati, the common rice.
No, normal rice. There was an MEP floor, I think, which was set,
Yeah.
800
Yeah.
per ton or something.
Yeah.
What happened was a lot of rice traders came and said, look, we've lost our market share
Sure.
to Pakistan and
Sure.
Thailand, and we can't reclaim
Sure.
that.
Sure.
Now, these are the distortions,
Sure.
which actually impede good price discovery for the farmers.
But you also have to look at, and I'm a witness to that, when one after the other expert comes here and talks to the Prime Minister, and when PM in 2008 is asking why the global prices are going up, and every expert says, oh, these prices are going sky high and they are going to stay there for the next 10 years. And everybody gets scary, because India cannot afford the rice price touching $1,000. What will happen to the poor? And therefore immediate reaction was ban exports. And then once they ban, even when the prices came down, the ban stayed. It takes 4 years to get the ban away. So my first report after joining the government was, open up. Keep from both sides exports and imports open, and only do moderation through import or export duties rather than outright bans.
I think they're trying to implement
So
that
they are
now,
coming to
gradually,
that.
Yes.
But when there is a comfortable situation, the test comes when there is a crisis, whether they will keep that policy or not. So 2008 was, I would say, an abnormal year in the history of food, when rice prices went and touched $1,100. So if that type of a situation comes, there will be extreme reactions from the government also.
Sure. But Hardeep, India is both a price taker and a price giver in the international markets. I remember a situation where, for example, India was contracting for sugar in the international market, and the CBOT was all abuzz about India entering the sugar market. Similarly for rice. Does that complicate the price situation both for India and the international markets?
Yeah. Let's talk about price risk management. But first, let me first address your question on rice and wheat. Just a short observation on that. A country that is moisture deficit has no reason to be surplus in moisture-intensive crops, and India is surplus in rice and sugar. It's completely skewed logic.
That's a failure in trade policy.
Pardon? It's a total failure of right thinking. So let's keep that at one side. The second is price risk management. Price risk management, or commodity exchanges, or hedging, as you might like to call it, is a mechanism to stabilize prices, not to extrapolate the volatility of prices. For example, let me give you a real example of the last year. India's largest export in the last year has been, agricultural export, has been guar gum. Guar gum is a product that suddenly found a huge need because of fracking of shale oil in the US. So it became India's largest agricultural export. Now suddenly you had one trader, one company, which is on the balance sheet of that company, it's public information, which made $150 million only on trading of guar gum.
Yep.
If this product could be risk managed and consumers could say, I will need 20 tons, 100 tons, 500 tons of guar gum, and I can contract this 1 year from now, then this arbitrage of being able to play the volatility for speculative gain would be lost. And I think there lies, that's the hub of the argument, that there is a retrograde thinking that if you allow commodity risk management, or in other words, hedging by nature is to reduce volatility. That means if you need something in the future, and if you feel prices are going to change from what you see today of the future, you should be able to lock in that price today as a consumer and as a producer.
But luckily the Indian government, and I think, I'm not sure how many in the audience know this, the Indian government toyed with this idea. If you remember, the Abhijit Sen committee was set up basically to establish a linkage between commodity futures and prices of agricultural commodities.
India actually went out and contracted product some years ago.
They didn't find any linkage.
And quietly they took a huge position on the international markets.
Absolutely.
Wheat, if you recall, about 6 years, 7 years ago, they didn't talk about that. Government took that position, which was the right decision to take, because they needed to hedge their position.
Right.
That the argument is, can you handle that volatility? And we somehow seem to say, what you need to be careful about when you talk about stock exchanges or commodity exchanges is that you should not allow cash trading. Indians and Chinese have a natural propensity to gamble. So you don't want people who are not associated with the business who come in and trade on the day.
Is that a vice?
It's a vice, and I think it's something that for anybody to be a seller, there has to be a buyer. Sometimes it corrects the market, it creates liquidity in the market, but typically that some of that money is not accounted money, so you need to be careful about cash position.
Right. Hardeep,
But larger issue, and let me just give you one observation on the larger issue which Dr. Lumpkins had mentioned. Thank God India is not China. 70% of India is vegetarian by economic compulsion, not by religiosity. As we become non-vegetarian, as China has become, the supply-demand position changes dramatically. If you look at poultry consumption in Bombay is now up to world average. All India poultry consumption is 1/7 of world average.
Yes.
Bombay is a diaspora of a Gujarati population, Maharashtrian population, all a mix. So as cold chains develop, as people start to learn to consume meat, and we've been saved by vegetarianism, and I'm just expanding on the point he made, it's the biggest issue is one, meat, and second, the diversion to biofuels, and I hope you'll address that also.
I just want to turn to you, Mr. Lumpkin. On the entire issue of climatic change and the environmental impact, he talked about water tables going down. In your research, have you factored in the fact that, at least in the northern hemisphere, for example, and in your field of research, wheat, temperatures have soared, average temperatures 4 degrees, 5 degrees. What's the impact going forward on yields?
This is probably one of the most frightening scenarios for South Asia. Many of the climate models predict that South Asia, even by 2020, is going to be shifted enough towards heat to push wheat out of large areas of South Asia. And so the whole agriculture needs to shift. We need to find heat-tolerant wheats and agronomic systems that reduce the effect of heat, but we're also going to have to switch to crops like maize that can tolerate that heat a bit better. And this is going to have a huge impact in South Asia, and a lot of diligence needs to be put towards preparing for it. This is the most severely affected place in the world, in South Asia, by climate change.
Unfortunately, public investment, for example, at least from the exchequer, has gone down drastically on a secular basis in India. To arrest the erosion in water tables, rain harvesting, enough has not been done. But what are your solutions? Is there any way forward for this? And then the second question, of course, would be, which Hardeep pointed out, getting into the BT stuff, like BT cotton. Is that the way forward in terms of yields, at least?
Let's take it from investments. Investments in agriculture, if you look at from 1980 to almost up to 2000, 2001-2, was hovering between 12% of agriculture GDP to almost 10% of GDP. It was coming down.
Sure.
And I'm talking both public and private. Right? And public was also coming down. What has happened after 2002? There's something very interesting that has happened, and as a result of that, today in 2012, the investments in agriculture in India are 20% of agriculture GDP. 20%, which is doubled in 10 years, which is a remarkable change. Now, from where it has come? You are saying public sector investments are declining. No, they have turned around, but biggest turnaround has taken place from the private sector. And why the private sector is coming up and investing? Because the agriculture prices have taken a lift, especially after 2008 scenario. The agriculture prices are at a different platform, and that is making many people to come and invest in agriculture. There is also an issue, and I would like to touch on that issue of water, because tomorrow's constraint in India is not likely to be as much land as the water is going to be. And therefore, agronomy practices or the seeds that will need lesser water, and particularly rice in Punjab. I just completed a study 3 days back. Rice in Punjab needs 1 kilogram of rice, 5,400 liters of water. And in West Bengal, it is exactly half, 2,700 liters.
The water table is higher.
Last year, we exported 10 million tons of rice, and largely it is coming from Punjab-Haryana belt. That means 50 billion cubics of water.
I see.
We are a water scarce country. Yes. And if we are not pricing water, if we are not pricing power, you are giving wrong signals to the system, and it's no fault of the farmer. It's a wrong
It's the fault of the government.
policy that you are following, and it is giving wrong signals, and therefore. So the issue of BT or research as such, you would need to handle climate change. Frequency of droughts and floods is going to increase. More droughts in South Asia, but upper reaches will have more floods coming from the Himalaya side. So you need drought resistant varieties, tolerant varieties on one side, and some of the flood resistant varieties for the northern, the Tarai belt.
But I think you've got the largest seed bank in the world, so I don't think that should be a
So
problem.
more research has to be done through private sector as well as government and the international organizations to tackle that challenge.
This is some of our heaviest investments now are in flood-tolerant maize, drought-tolerant wheat. We are investing heavily in that, and the agronomic systems that also support those varieties that have those traits.
Sure, we've got about 15 minutes to go, so what I'll do is I'll open the floor to questions. Yeah, just keep your questions short and identify yourself, please.
Hi, I am Amit, and I manage some of the insurance funds in the Indian sector. And my question to Mr. Singh did touch upon the trading aspect of the commodities. And my question to him is, what could be a role of exchanges in managing the prices of agri-commodities in particular? Because much of this thing is through speculation and all, that determine the prices. But being an exchange, what could be its role?
Exchanges are the mechanism for price risk management. Unfortunately, not all products can be traded on the exchange. If you look at products out of India, for example, guar gum could not. There is no contract for guar gum. You can trade some commodities, you cannot trade some. Major commodities like coffee, etc., are traded on the international exchanges. Sugar is traded on the international exchange. Vegetable oil is traded on the international and now a domestic exchange. Our domestic exchanges are still thin, but the government does allow you, if you're a consumer or a producer, to manage your risk nationally and internationally. There are mechanisms to be able to do that, unless, of course, there is retrograde sort of thinking at some point in time and they ban risk management altogether. But there are major products like tea, which have no risk management available, which is entirely flat price. So a short answer is all commodity risk management has to be done through a mechanism of commodity exchanges, whether nationally or internationally. And sometimes you can play a relative arbitrage, you can hedge domestically, internationally. Sometimes you may not have the exact commodity that you're producing or requiring, but you can hedge a commodity that is somewhat similar. For example, a grade of product which you are going to consume may not be the exact grade that you will be able to hedge, but the moment you have a hedge, that means you'll be able to buy or sell it forward, your risk of volatility in that commodity is reduced only to the relation between the two varieties or the two qualities, but not overall in the commodity? Sorry, is that too complex an answer?
Gentleman there. Just a sec, let him get the mic to you, please.
Raj Krishna is my name. I just wanted to point out that the thematic questions we posed in the text, we haven't taken up. So therefore, I would ask this question, that how do we visualize public and private sector investments to come into the agriculture sector? Second is that, how to eliminate distortions in the international food market, which of course is mostly blamed for the present high price situation in the world. Two questions.
Directed to anybody specifically?
You?
To me?
No.
To anybody in the panel, okay. No, just to tell you, Mr. Bajaj, we discussed this, we touched upon these, maybe you wanted to be deliberated upon. Do you want to take these questions?
Yeah. The public investment and private investment question, I think the basic research that needs to be done in the country, particularly in the crops which poor consume, has to come much and more from the public sector than from the private sector. But building the supply lines entire for particularly the perishable commodities should be all by the private sector. Government has to just incentivize and leverage that entire thing. So question of you raised earlier, FDI in retail. I'm not a fan of FDI, I'm a fan of organized retail has to come up in this country. Whether by domestic players or international players, you need huge investments from the logistics to processing to retailing. The wastages that we are having, many a times people challenge that, but even the latest report I was reading from International Mechanical Engineers, they say India every year damages 21 million tons of wheat, which is more than the production of wheat in Australia. Now, if wheat is being damaged that much, how authentic that report is, because it is a global research and on global things. On fruits and vegetables, it could be even more. The quality is damaged. Somebody else's value loss is there, and you need massive investments, and I think that's where private sector has to come in a big way. That's a fertile field.
But has enough been done from a policy point of view to incentivize private sector investment?
As far as the infrastructure is concerned, yes, things are opening up gradually, whether it is the cold storages. I was in Bihar a few weeks back and looking at the rice milling capacity. They are giving at present, in fact, a subsidy of 35% on capital subsidy on rice milling because the prices there collapsed because there is no rice milling capacity. The production is increasing. It's very interesting that those prices are 20% below the minimum support price. There are no takers because mills are not existing, and all that thing is coming all the way to Punjab for milling and then goes back as rice in the public distribution system. So in the processing, they have now launched a special mission mode. So things are coming up, but I'm sure 10 times more can be done.
What could be done?
And because we are exploiting, as you were saying, 25 big companies, if you look at what they are doing, they are exploiting only tapping 8-10% of the total market. So 90% market is still open for major investments.
Sure.
May I come in on
Please,
the distortions? I think you also mentioned distortions, and
yes.
Sometimes I have the impression that especially policies, climate change policies are worse than what we expect from climate change, and I want to mention the biofuels that you also brought up. Up to 2030, there is an estimate of 1.2 trillion US dollars of subsidies for biofuels. With the trillions, I always have to count the zeros because I lose oversight. It's a big number. And this has a devastating impact on the food market. Transforming food into fuel is really one of the worst distortions that have been added over the last 5 to 10 years. And just to get an idea what the orders of magnitudes are, it's always about calories. But in calories, measured in calories, the total energy market is 20 times as big as the food market. So very small percentages of the energy market being moved from traditional energy into so-called biofuels has already an impact on the food market that we have seen it in 2008, makes the price increase, starts to reduce food security. So we have to address all the existing distortions in the market. But in the first place, we should stop adding new distortions for a market that is as fragile as the food market.
Sure.
So may I just add to that? Is that question?
Add to that? Okay.
I think just to add on GMOs, because, or not on GMOs, on biotech, to your observation, it's spot on. Energy markets, 20 times the size of food markets. So it's not just the tail wagging the dog, but the tail getting itself in a twist trying to wag the dog. The only biofuel hypothesis which is not been challenged is sugarcane in Brazil to ethanol. The one that has the first to fall, the hypothesis that the first to fall is biodiesel in Europe. Now you're importing palm oil from Indonesia and Malaysia, burning a forest, taking palm oil to Europe to produce biodiesel based on huge subsidies. You're converting corn, huge amounts of corn, where the world is short of corn, to ethanol. So these are very large distortions, and that has caused the huge spike. Already agriculture is short. It is this in trying to influence this, and this is getting more stressed, and this is food, this is energy. So it is more than the tail wagging the dog. Yeah. It's a very large issue. Then on public and private investments, I think you need to put in context, including in a country like India, and Ashok dwelled on that, the only magnitude change in productivity in India over the last 7 years has been in cotton. And that is entirely and totally due to private research, biotechnology. Yeah. There is no other, in all for 50 years of agricultural and industrial research in India, these huge institutions, not a single chemical molecule has been developed in India, not one. Mm-hmm. India has yet to produce a single molecule out of these huge public sector institutions that we developed. And there is, even if you talk also of the agricultural development, basically it's adaptation. You know, sort of you had today you've got people in India who claim to be the fathers of the Green Revolution and the mother of such and such revolution. Essentially it was Dr. Norman Borlaug who brought wheat from Simit. And so we have really tweaked what we've got. Basic research in India, and that's the nature of the beast. That public institutions, unless they're international multilateral institutions like CIMET, are constrained for resources, and therefore you have time-serving people who lead it for a point in time. Some good, some not so good.
Because on the BT side, that's going to be a huge, not the BT side, I mean the biofuel side, that's going to be a huge shrinkage or a bottleneck perhaps for the entire agri-space going forward.
Yeah, but it's already getting addressed. Right. Nations and regions are already being sensitized to the fact that this is not a one-side hypothesis. And you need to look at real diversion and what's going to happen to the consumer.
Right. Very quickly, any other questions? Okay, gentleman there.
Hi, my name is Sunny Baraga. I had a question for Dr. Gulati. Maybe you could give us a sense, given that land costs are generally very high in India, in the agricultural sector, what are sort of the yields that an investor can expect to make in investing in the private sector in agriculture in India? That's the first question. The second question is, if you could just give us a sense as to what the losses are after the product is produced in terms of pilferage, transportation, logistics, and so on a percentage basis.
Okay, cost of land and whether agriculture can remain remunerative. If you buy land and you want to do agriculture, the chances are you are going to be ending in red. So don't try to, unless you are creating a real high value product on that. Wheat and rice and others will not give you. And this is all the world over, because it's the owned land. Normally, if you start counting the market rental on those lands, then the pricing does not justify. That's one. If you have to look for that model, you have to go to Africa, where in Tanzania or other places, land values are much, much lower. In India or China, it's a different story. The second question on the wastages or losses. There are some losses which are, you can call it disappearance from the system, pilferage from the public distribution system, for example. Our working of that was almost 40% from the current system is diverted away. It doesn't reach the real beneficiary, targeted beneficiary. And that's one of the reasons we are saying you go by the conditional cash transfer route rather than physically handling wheat and rice. But on total damage of the crop or damage of fruits and vegetables, there are all sorts of numbers that are being floated. The earlier numbers have been about 30% damage, 30 to 40% they used to say. ICR has done some surveys, they got it done. They are a little less than that because in India it's always somebody, even the damaged thing gets a buyer, but at a lower price. So capturing that value loss when you are handling fruits and vegetables in the way we handle in the bags and sitting on the bags and all that, it's a value loss. And how do you capture that? It's a little difficult. But anywhere 25 to 30% still would be a valid number for perishable commodities that can be saved by huge investments in logistics.
Sure. A question which I didn't get into, but I'll still ask you because you brought up the question of land, land acquisition bill. What kind of pressure does it exert on, let's say, double crop land, multi-crop land? There are issues about whether to take that kind of land away from agriculture. Does it add to the land bank pressure in India for agriculture?
You know, I think most of the countries have at some stage in their history have decided what the land use patterns broadly should be in the country. We are lucky that we have a Gangetic Delta which we perhaps need to protect for agriculture. But if you go to Vidarbha or that region, whether that is suited for agriculture or not, because to make it suitable for agriculture you have to do huge investments. And therefore, when Hardeep was talking about sugar, the cost of producing sugar, if you really value water in Maharashtra versus in Bihar, it's topsy-turvy. And if you go back 100 years, the real seat of sugarcane in the country was Bihar and eastern UP, where nature has given you water. Today, there is no drinking water available in many districts of Maharashtra, and we are growing sugarcane there. It is all a major policy distortion. It's a policy distortion. Sure. Because the licenses of sugar mills were given on a priority basis to cooperatives, and cooperatives worked more in Maharashtra side. This needs to be aligned with the natural resource endowment of the country. So I think that is the message that we have to take out of this. Question of land usage, so you have to carve out first that where there is already double cropping or even triple cropping, those places have to be kept more or less reserved for agriculture and agribusiness activities. Others you have to look for more industrialization or bigger parks. Issue whether the corporates should come and buy land and do cultivation, I don't think in this country for the next 10, 20 years that is likely to happen. Maybe in one crop or the other as you have in tea or coffee, maybe tomorrow in palm, because it requires a long gestation period, so they may allow those. But given the pressure of population on land in this country and given the land holding sizes in this country, next 20 years, don't think of corporate farming in this country.
Okay. Gentleman there.
Ms. Manoharan, my question is to Mr. Hardeep Singh. You were talking about depletion.
I didn't get your name, sorry.
Manoharan.
Yes.
You were mentioning